Hi everyone, welcome to this tax lab session. This is actually the seventh one of these I've done now. All the previous six are actually on my website. If you ever want to go back and look at those, so far they are all on the topic of tax research and tax advice in some way, and helping you all to become better at doing research and better at doing advice and all the benefits that brings. This one is more focused on the advice side of things. We've got a real scenario that actually I dealt with in my role. And I think it's a pretty interesting one in that, first off, the technical position was not clear. It wasn't slam dunk, this is the answer. And turning that into something that's like helpful and useful advice for a client is quite difficult. So let's quickly run through the scenario first. Then what I'll do is I will share my screen with the actual like written output that went to the client, although it's been anonymized. And also like the before and after versions before it was reviewed by a director. So the scenario then, so in this case, a query got referred my way because a payroll person I knew, the HR team in an education provider that they work for, ended up sending them a bunch of information around some payments that needed to be made because the education provider was making large scale redundancies. The payroll person did not want to make any payments to these people before they realized like what the correct tax and national insurance treatment was around the payments, because they didn't want to get things wrong. So they wanted to make sure that tax advice was taken. But the payroll provider, sorry, the education provider needed to make these payments quickly because they'd already agreed with the staff that payments were going to be made. The individuals in question, where there was a particular issue, was I think it was three individuals, all of which basically had been on sabbaticals prior to being made redundant and then not received any pay for like the few periods prior to their last work day and their notice ending and all of that. So that was the main reason that this became a thing in the first place. Problem with this one was after it had been looked at by a manager, a tax manager, they noted that basically the technical position is not clear cut or slam dunk. It's down to a level of interpretation and subjectivity, and HMRC guidance wasn't clear in terms of even saying what they believe the answer was in this case. It was such an unusual circumstance. The tax manager ended up drafting the advice to go to the clients after they had come to what they believed to be the correct technical position, and then the director reviewed and signed this off, but made changes to make this more client friendly. And this is the element that I really want to focus on primarily in this session: is making the advice where it's technically difficult, it's technically unclear, and turning that into good advice for a client. That's the main thing I want to focus on in this session. So I'm just going to open up the Word doc. So can you see that on the screen, and is it big enough? Do a few people just mind putting a quick note in for me? Just let me know that's okay. Yes. Thank you, Ayub. Thank you. So what I'm going to basically do, because it's not a huge piece of advice, I'm going to run through pretty much all of it, if not all of it. Because what I've got here is I've got the before version in track changes. So the original here is pre any changes that were made through the review stage. And the simple markup here is after. And what we'll be able to do is we'll be able to look at the differences in both of those. And I can talk through them and why those changes have been made. So let's start off with the original version then. So I'm looking here at how this is laid out. I quite like it in terms of structure. So the fact pattern is here right at the start. So this is the client's opportunity to say, no, this is not right. Because obviously the advice is going to be based on the facts. And so you need to make sure that you're working with the right facts. That's what the fact pattern bit is to do with. There's then this section called summary of tax advice, which is the rest of the document. So an extra an extra point was added in here, and I'll explain why in a second in the review stage. So let's start going through this then bit by bit. To start off with then, we've got the fact pattern, which says we understand that three employees have accepted voluntary redundancy and are currently on unpaid career breaks. They will not be paid a payment in lieu of notice. So if it wasn't clear that the client knew what this was, you definitely want to say this in a long form and then define the abbreviation to make it clear. But in this case, this advice was going to someone in HR, and they knew what this meant. So this is fine. Each employee will be receiving a statutory and enhanced redundancy payment, which, when added together, total the following for each employee. So 22K, 11K, 16K. So for those of you, it doesn't matter about if you know the technical around this, by the way, because it's not the point of the session, but you may know that there's a 30K amount where, as long as it falls within that 30K bucket, it will be tax and NI free when it comes to termination payments. It's not a given, but it is there. A lot of people think it automatically applies. It doesn't automatically apply. But anyway, we've got the payments here. Another fact then, so the employees are all part of the business support function, not fellows. Due to the overall decrease in headcount with the client, there is no longer the requirement for these roles to exist to support the function. Okay, so just to clarify this, an education provider, they had these people called fellows. They were essentially academics, I suppose, and then the business support function supported the academics. Again, the client's got to know what's meant by that because it's their terminology. So let's have a look at what changed then here. So a bit was added here to clarify by the looks of it. Currently on unpaid career breaks and have not been paid for some time slash numerous pay periods. This fact is important actually because when you look at the technical behind this, you have to look at the pay in a particular pay period, and by knowing that it wasn't paid for numerous, we knew for sure then that that it was zero in all the relevant pay periods, basically. It was never anything other than zero that needed to be considered. So that's why that was added for clarity, just in case that fact was wrong and it could have impacted the advice a bit. They will not be paid a parental notice. So that it turns out that at this stage that was added just to make it slam dunk clear by the sounds of it. I don't think that's absolutely necessary, but that's why that change would have been made. I did note that before anyway. So there's an extra bit added here then. So let's see what this extra bit says. Whilst there is some arguments to suggest that the payments do not fall squarely within the definition of redundancy payments under Part 11 of the Employment Rights Act, ERA 1996, your employment lawyer has confirmed that it is more likely than not that the payments do meet that definition. Further, the communications with employees offered voluntary redundancy, which has been taken by them, and there is a mutual understanding between the parties that this is in fact a redundancy situation. So this is being added in because of the fact that the technical is subjective and debatable. In order to get to the right tax position in this case, we needed to rely on a definition that was within the Employment Rights Act, which isn't tax legislation, it's employment law legislation. And basically, if something was a redundancy payment under this legislation, that changed the treatment of the payments as opposed to if it didn't meet that definition of redundancy payment. So it's super, super important. But it was something that the tax advisors here couldn't determine themselves because they're not employment law experts, they're not experts in the Employment Rights Act. And so the employment lawyer that was helping the client had dealt with this and confirmed that it was more likely than not. It was really frustrating actually in this case because the lawyer's answer was really, really wishy-washy. But the lawyer did say it was more likely than not. The client absolutely slammed dunk believed that they were redundancy situations and therefore the parents of redundancy, which is why this is added in. This is basically making it clear that the advice depends on this fact here. It depends on this. And so if it's wrong, they need to come back and say. This is a good statement that was in here. I always think this is the right thing to do. It's to make it very clear to the client that the above advice is based upon this, and therefore, if it's correct, please let the advisor know. So between this and another section here, at the review stage, a conclusion was added on top of this. I'll tell you why I think this is useful. So if you look at this without that conclusion being added in, the next piece, the next part of this document is this really long section that is called Summary of Tax Advice. And actually, by reading this summary of tax advice, first off, it's going to be quite difficult, I think, for the client to figure out what the answer is here. All the client cared about was whether or not those payments up here needed to be subject to pay as you earn through the payroll, whether they need to be subject to national insurance through the payroll and at what rate. That is literally all the client cares about here. They don't care about anything else. Oh, some people being kicked out. Let me add them back in. Sorry about that. I've just added everyone in. They should all be back now. Thank you for letting me know. Sorry, everyone who got kicked out. Hopefully you're all back and can hear me now. I'll just summarize super quickly what I basically said before. There's this fact pattern here that was put in by the manager that drafted this advice. Um, and the only bit that was really changed or added by the review stage was an extra point added in because the advice here depended on a very important kind of technical point, and it wasn't actually a tax technical point. It was more so an employment law technical point. And the whole advice depended on whether or not these payments were considered redundancy payments under a particular definition. So this was added into the fact pattern because if the client disagreed with that fact, they need to let us know because it would have changed the advice. So the manager didn't put a conclusion section in or anything else here. They just jumped to this summary of tax advice. As I say, all the client will care about is, and all they cared about is whether or not these payments here needed to be subject to pay as you earn, national insurance, and at what rates so that they could process things correctly. That's all they cared about. So actually, whilst there's a lot of detail here, and some of this is necessary for protection of you and as an advisor, because it's caveats and it's making it clear on which your advice is given, they don't really care about any of this, is the reality of the situation. And so this is where this conclusion that's been added in is really, really handy and helpful. So what this does is it gives the client like the answer at a glance, right at the top of the advice, just under the fact pattern. You could argue that this could go above the fact pattern because it's all they care about. I think it doesn't really matter too much. It's still very early on in the advice. So it says that the full redundancy payments, enhanced and statutory, should not be subject to income tax and should not be subject to national insurance. Our reasoning for this is explained below, and our conclusion should be read in conjunction with the below. Our conclusion is based on the facts above. Okay, so this bit here, this really is all the client cares about. However, just because there is some level of subjectivity and risk around this, this here is basically the caveat saying read the below to make sure you understand it and agree. So let's move on to the summary of advice section, which actually was changed to summary of reasoning. The reason that would have been changed is I don't think this section is a summary of the advice itself. It is actually a summary of the reasoning behind the advice, which is this here. Okay, let's have a look at this then. It might be easier. How should I do this now? I'll read through it first as an original because we've got 15 minutes or so, and then I'll go through and talk through the change. I think that's the best way I can think of dealing with this right now. So this says there are special tax rules which tax payments and benefits relating to the termination of employment. Under these rules, there's a potential to have up to £30,000 paid tax and national insurance free. So that was something I noted earlier. It's a good point to note. These rules apply to payments and other benefits which are received directly or indirectly by the person in connection with the termination of a person's employment, such as redundancy. I like this clarification here. Someone might not consider a redundancy to be a termination of a person's employment, but it is, and this makes it clear to the person that's reading this. Certain payments on termination of employment do not benefit from tax and NIC free £30,000 threshold. And of course, any amounts in excess of the threshold are subject to taxation. This includes payments within the post-employment notice payrolls. The PEMP rules apply to relevant termination awards in respect of the termination and comparing this to the amount an employee should have received should they have worked in this. Okay, so I would say at a glance though now, and we'll see what changes were made at review stage. I think some of this is unnecessary. First bit is this here says there's a potential to have £30,000 paid tax and I free. This bit basically says the same thing in different words, so it's repetition, I would say. And secondly, and of course, any amount in excess of the threshold are subject to taxation. I think that I think that is obvious based on this statement here. It's not duplication per se because it's inexplicit above, but it's made explicit here. I don't think it's absolutely necessary. I wouldn't necessarily take it out either though if I was reviewing this now. This includes payments within the post, da, da, da. So all this stuff at this point, it doesn't seem like it would be particularly relevant. So it might have been taken out at review stage. So I'm a big fan of only put in what the client needs to know. If there's anything that the client doesn't need to know, it's noise and it can be taken out because it'll make the document shorter. It'll make it easier for the client to understand. And I think they'll appreciate that more. My general rule when there is something subjective in the technical and the advice has been provided on that is to not explain all the rules and every little bit of that, which a lot of advisors seem to jump to doing that. What I do is I identify the ambiguity, the bit that's subjective, and I'll make sure that I explain the points, the bit that's subjective only. Because what that does is it means you can not comment on loads of irrelevant information that the client's not going to care about, but you're still protecting yourself from the risk because you're commenting on the bit that's subjective, you're telling them why it's subjective, and you're telling them what you believe the answer is and why, so then they can come to their decision in terms of whether they agree or not and take the action that you recommend or not. So let's see what changes have been made then to this bit. So this bit says there are specialist tax rules which tax payments and benefits related to termination of employment if the payments broadly are not taxed as employee earnings for other reasons. So what this is just making clear is because this bit is all about explaining these tax rules, this is just clarifying a point that the £30,000 isn't due basically where the money is treated as earnings or taxed as earnings for other reasons. It's just a clarification. I wouldn't say it's absolutely necessary to say that, and it's arguably a technical point that the client doesn't need to know about, but nonetheless, it's just a clarification. So it does look like at review stage, this bit was taken out. So the rules apply to payments and other benefits which are received directly or indirectly. Da, 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 da. Okay, maybe that's just been moved actually then to somewhere else. We'll see that. Has this been moved? Because I quite like it at face value now. This does go to show though actually how sometimes it can be arguable what's necessary and what isn't necessary, etc., because people can have different opinions on things. They've added in a point here. Redundancy payments meet the definition under this, which is the employment law we talked about earlier, automatically fall within these rules, and we've assumed for these purposes of this vote. Okay, so this is coming directly underneath this £30,000 here. So what we're telling them is that if these payments actually are redundancy payments and they fall within the 30K, the client at that point could infer that it's therefore, tax and national insurance free. But I'm assuming that somewhere else later in this advice it will state that. It does obviously state in the conclusion, but it might also state in this summary section. So let's see what changes have been made to these bits around here then as well. Certain payments on termination of employment do not benefit from the tax and national insurance free threshold. So that bit has been left in actually. Any amounts in excess of the threshold that would otherwise benefit from it are subject to income tax as well as Class 1A national insurance. I suspect this is just being anal and pedantic to make sure that what is said is like crystal clear and 100% correct. Payments that do not even benefit from the £30,000 threshold include payments that are caught by the post-employment notice pay rules. Okay, so this is making it clear that there's certain payments that never benefit from that 30K, which is any payments caught by the post-employment notice pay rules. I think that's going to come in a bit because arguably there is an element of post-employment notice pay that could mean that 30K isn't due. If the redundancy payments, though, did actually meet this definition, then it automatically falls within the 30K. But as noted before, like there was a bit of question over whether or not they actually were redundancy payments. Assuming that they are, then they fall within the 30K, which the client can now see from all of this. Let's go back to so it's from this bit. The PMP rules apply to relevant termination awards in respect of termination and comparing this to the amount an employee should have received should they have worked and been paid for their full notice period. So that has been changed a bit as well. Let's see what changes have been made there at review stage then. So the PMP rules apply to certain payments. So I think that's probably just something that's simpler. Like a client's probably not going to know what is meant by relevant termination awards, and it's jargon really. So that terminology has been simplified in respect to the termination, and essentially are intended to make sure that an amount equal to notice pay is always taxed, even if notice pay is not paid in their full notice period. So I think this is just simplification. This is just simplification of what was said before in a way that it's hopefully going to make more sense to someone that works in HR, who this would go into. However, the PMP rules do not apply to a redundancy payment defined as a redundancy payment. Da, 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 da. Okay, so this is just making all these points clear. So at this point, you can see why this heading was changed from summary of advice to summary of reasoning. This is all about the reasoning rather than the advice. This is the advice bit that's here. Okay. So this bit is really now starting to come part of the big caveats then. So this is just saying that the employment lawyer confirmed that there's a strong argument that the enhanced payment to the business support team does not meet the definition, does meet the definition per ERA 1996, as they're also being made redundant mainly due to a reduced requirement of the business for the employees to continue in their role. So this is important because it's coming back to this fact that we had before about whether it's a redundancy payment or not, as per this Employment Rights Act definition. This is referring to here and why it's relevant, I suppose. This is explaining why that point is relevant. So it does then say, if, however, HMRC were to challenge that the redundancy does not meet the definition of redundancy, there is a need to consider the PEMP rules. Okay, so this is saying like why the summary advice, the summary of the justification is referring to PEMP. If PEMP wasn't relevant to the justification, it makes no sense to refer to PEMP at all. It's just going to confuse the client. However, clearly it's got relevance to this advice now, and this is where it's starting to come in. So it makes sense now as to why PMP was mentioned above, because HMRC can challenge that the redundancy payments do not meet the definition, and therefore they don't automatically get the £30,000 tax free. Does that make sense? So then the reviewer, the director, has then said, we consider that the risk of such challenge is low based on what we know, although we appreciate your lawyer's caveats and caution in this regard. In any event, our view is that the payments would still benefit from the £30,000 threshold. Okay, so what this is saying is which is really useful for clients, is for the client to know where you stand on the risk. If you consider it low, tell them it's low. If you think it's high, tell them it's high, because they're not going to be able to know that unless you tell them, basically. So I think that's really useful to add. However, there's another useful bit here which says, in any event, our view is that the payments would still benefit from the £30,000 threshold. So basically, what this is saying is that even if HMRC challenges that point, we still consider the answer to be the same, essentially, which is helpful to know, right? I'm assuming again, we'll get to this in a second, that second that second point there is still a subjective point. So basically, you can get to the right answer or to the same answer with two different justifications, which gives two walls of defense against HMRC if they ever want to question it or dispute it, essentially. Let's carry on. So the calculation itself in regard to the PMP rules are straightforward. However, it relies on the last pay period of the employee that ends immediately before the trigger date. Okay, so this is explaining now, and this is important because of the fact that these three employees in question weren't paid anything for like months before they were made redundant. It's saying that it relies on the last pay periods immediately before the trigger date. This then explains what the trigger date is. The trigger date in this case would be the day that the notice was given to the employees, which we assume was given. So basically, we're trying to figure out what pay period needs to be looked at. So this helps you figure out what the trigger date is. You've got the trigger date. You can then figure out the pay period immediately before this. So it makes sense as to why this is in the advice. There's no statutory definition of the last pay periods, and therefore there is some ambiguity. Okay, so basically, again, there's another ambiguity. So there's ambiguity around whether or not this payment meets the definition of redundancy payment or not, and there's ambiguity around what is considered to be the last pay period or not. This could be construed as the last pay period that the employee receives a payment in, or it could be construed as the last pay period that they will have been paid in had their pay not been zero. So essentially, what this is saying is that there's two options here that could be the last pay periods. It's either the last pay period where they received zero pay in, or it's the last pay period where they received some pay in. So those are the two options. Then the advisor, along with the review comments, basically said our view is that the last pay period of the employee before the trigger date was a period of nil income. Okay. So the change between what the manager put and what the director changed is they removed reasonable to argue and said that instead said it's our view that this is the answer. So this is more soft and likely to come across less well to a client. Reasonable to argue, obviously, is like, well, how reasonable is it? Is it reasonable? Is it not? What's your view on it? I think in this case, it's much better to tell the client what our view is or what the advisor's view is of that situation, so then they can act upon that. He then looks like he's got explanation as to why that's the case. She says they were still employed by a client during this time and they would have received pay in this period had they not been on unpaid leave. We also assume that the employees were still issued pay slips with nil income during this period. That could arguably have gone in the fact section at the start since that's important. But I think by the by, it's in here somewhere and the client has an opportunity to come back against that. The fact that the individual did not receive pay does not alter the basic meaning of the words in our view. In fact, the fact that the client appears to have taken the view that legal pay is zero, ignoring the tax point is helpful, as this suggests that client considers that legally no notice pay is due. Okay, so essentially what this is saying is what the advisor's view is and why. It's explaining it because it is subjective. It then gives the client an opportunity to go, well, I appreciate what you're saying, but I don't disagree, or there's too much risk involved, whatever it is. It gives them the chance to understand what they need to understand and know whether or not to agree with the conclusion or not. Following our view, as the basic pay for the employee during this period was nil, the PEMP calculation will also be nil. This means the full enhanced redundancy amount would therefore also benefit from the £30,000 tax-free threshold, even if the enhanced redundancy payment doesn't meet the definition. Okay, so essentially what that's saying then, it's just clarifying the point that it doesn't really matter what reasoning we apply here, we still think the answer is that it benefits from the 30k threshold. It's explained how the advisors come to that conclusion and where the subjectivity sits. So I actually don't think there's a lot of information left in this at the end that could have been taken out. I think it's fairly clear. It's a little bit technical at times. I think he does a good job though of simplifying that to the extent it can. But as I say, the main point really, I think, if I was now reviewing this advice now and going through it, the main points for me as a reviewer are: is it going to be clear to the client, and do they have the answer to what they care about quickly? In this case, they do have the answer to what they care about quickly, which is here. The advisor has given protection to themselves because they've explained where the subjectivity is and basically why. So that's been explained too. And so there's no opportunity here for the client to go, we didn't understand that, or you never told us that. Like, clear advice is given. It's said what they believe their view is. It's also explained how they've got there. So I think advisor is clearly protected against any risks there, and the client has also got in their eyes a definitive piece of advice that they could act on. So I think it's win-win in both circumstances there. If you've got any questions on that, do you want to start typing them into the chat for me? You should also actually be able to unmute your mic if you'd rather speak instead. I'm just going to have a quick segue over into the questions section now. Okay. So just before we move on to the questions then, dealing with situations like the one that we've just gone through where the tax rules aren't definitive is pretty much the norm for us in tax. In order to go from the start of advisory work like this all the way to the end, the advisors have had to solve two problems. First off, they had to conclude on the technical position. This involved research in the relevant tax legislation, HMRC guidance, professional commentary, looking for relevant case law, and then applying all of this to the client's fact pattern to come to conclusions. They identified that the rules were ambiguous, but if they just went to the client and said, it could be this or it could be that, the client would not be happy. It's not what they're paying for. So the advisors had to land on what they believed was the right answer in this case. This here is what I refer to as tax research skills, although really they should probably be called tax research, interpretation, and application skills, but that's a bit of a mouthful. It's all of those things wrapped into one. The advisor then needed to turn that technical, so this is the second problem. The advisor then needed to turn that technical into valuable advice for the client without putting themselves at risk. And this is what I refer to as advisory skills. And to be an excellent tax advisor and to provide excellent tax advice, both research and advisory skills have to go hand in hand together. My tax research masterclass is designed to improve your research skills. My tax advice masterclass is designed to improve your advisory skills. A recent attendee of the tax research masterclass actually said that within a month of the masterclass, she was easily answering queries that she used to defer to colleagues. She also spotted a potential £2 million tax issue for a client, provided a solution, and her director decided to use her solution, which, in her words, felt brilliant. Before the masterclass, she was thinking about leaving tax because of how she felt about herself when doing technical. She was feeling stressed a lot, especially when researching, but since the masterclass, she's now proved to herself that she can do it and she feels much more confident in her technical ability. In relation to the tax advice masterclass, a head of tax said, I have noticed a big difference in my colleagues' confidence and the advice they're now providing is a lot more tailored and more focused on what the client needs to know. Overall, a great course that adds value. So whether you want to improve your own skills here or whether you want to improve the skills of your team in these areas, my masterclasses are here to help. The next advice one is on the 1st of July this year, so it's about a month away, just short of a month away. My next research one is in September, starting on the 30th of September. But for details, if you want to look at that or if you're interested in enrolling, you can head on over to the taxprofessionalspodcast.com/masterclasses, or you can scan the QR code that's on the screen right now. I'm just going to put a quick note, the link in the chat as well. So please do send your questions in. If you want to unmute your mic now, please do as well. More than happy for you to speak and ask your questions via that route. It just makes it a little bit more interactive if you feel comfortable to do that. So I can see that one question's come in, or two questions actually. So first one from Michael. So Michael has asked, where the legislation may not be entirely clear, would you give advice as shown today to the client to explain the risks, facts, advice, and then also disclose in white space as best as you can for HMRC to help with inquiry windows? So I know you're going to be thinking about this, Michael, from a personal tax standpoint. I actually did a piece of advice maybe 3 years ago now, which was termination payments, but from the angle of the individual. In that case, what we wanted to do was get a refund though from HMRC because the employer, in my view, had overtaxed it. And so as part of that process, what I did is I told the accountant what to put in the tax return in terms of the right number that needed to be taxed, etc. And there was a very detailed white space disclosure there actually that said that this is the situation, this is what we believe to be the correct answer. And then I also gave a full detailed report to explain how we'd come to that answer. So I suppose in short to your question, for personal tax situations, yes, you can do that. I think it will very much depend on the circumstances, and it will be something that you can advise the client to do and talk them through like the benefits and the negatives of putting it there in the white space. But yeah, generally speaking, I'd say it's a good idea to do that, although fact dependent. Oh, which issue do you have, Amanda? Is it to do with termination payments or something else? I'm going to start answering Damon's question as well. So it might be a silly question. Excuse me. Might be a silly question, but doesn't the combined redundancy payments total more than? Oh, sorry, Damon. At the start of the advice, I think you're referring to this. So this is for each employee. So one employee's received this, one employee's received that, one employee's received that. So in this case, in this case, each individual, each employee received less than £30,000. I think that's what you're referring to. Um, Amanda has said she has this issue right now. Clients with termination payment inquiry. Oh, really? So, what angle are you dealing with, Amanda? Are you dealing with the individual, or are you dealing with the employer in this case? Oh, is that actually right, Michael? Then, yeah. I don't know if you know the outcome of that one in the end, but the individual got 180K or so back in tax, and also applied for national insurance relief as well, refund. But I left the firm where I did that work for before I got the final outcome of that, so I don't actually know what the answer is on that. So Amanda has said HMRC systems kept rejecting the repayment as it didn't match the employer's FES figures. Yeah. So is that when you were trying to submit the self-assessment then, Amanda? So in the case that I dealt with, I don't think that happened, but we did do a very detailed white space disclosure to basically say, look, we know that the employment figure here is going to be different to what's on your system, but that's because the wrong amount has been reported by the employer, and this is what we believe to be the correct amount and why, basically. Interesting. I'll be interested to know the outcome of that, Amanda. Sounds like an interesting one. Does anyone have any questions related to the advice at all, and whether you may even disagree that something made something simple or not, whether there's anything you still thought was too complicated, whether you think a different approach would have been better? Any thoughts at all you have based on the scenario we went through and the advice we looked at? I'd be interested to hear. If you do think it's easier to unmute and talk, as I say, please feel free to do that. Yeah, fair enough, Amanda. Do you know how much tax is involved, do you think, in this case? Okay. So to us normal folk, 14K is quite a lot of money, isn't it? So yeah, I understand what you're going through then. How sure are you that 14K is actually due and that is the correct technical position? Okay, I'm going to give it another 30 seconds or so. Interesting, Amanda. If you want to have a separate chat with me on that, by the way, I'm more than happy to. I can give you my quick view whether I think 14K is actually due back or not as well. Yeah, I'll can you drop me an email after this, Amanda, and I'll drop you my mobile number. No problem, Damon. It looks like that's probably it, I'm going to say. So if you found the session useful anyway, I know it is quite hard to go through like an actual piece of advice when all those changes are on it. But what I'm trying to do with these sessions is give you an insight into the starting point, what changes were made, and why, so you can see all those different bits and understand like why the changes were made, why things have been done, why it improves things, etc. So hopefully, even if you didn't follow all the technical bits and it was a bit fast, hopefully you got the gist that that improves the advice.